Hey everyone, welcome to the weekly review. And we had follow through down this week. We have a breakdown below the consolidation range. So looking quite bearish, and I don't think the move is up. This was what we were looking to see break out of, and with going either above or below these levels, and we did in force. And for next week, this is what I expect will happen. We go down, we stop in this gap area here, maybe retest, maybe we don't, then go up, uh, do a retest, go up again, consolidate, and target for year end is, I have these levels based on the June range, which have proved very accurate. This was the June range, and I just doubled it or made ranges of the exact same size above and below it. As you can see, they hold up very well from a level to level perspective. And the maximum we can see is either a retest of 460, go a bit above it, then get rejected for something like this, an overshoot, or go to 470 by year end. Now let me turn off some stuff. This one, why do I have this one here? Don't care. What I did as well was expand the Q3 range based on what happened this week. We made new lows for the quarter. Because we made new lows for the quarter, we are now in a possible engulfing candle quarter. It's very unlikely because we only have 1 week left of the quarter, and it's another 6.5% to take out the lows. But what we want to know is the quarterly midpoint, because that is going to be the previous quarter's midpoint, because that's going to be support. And we go back to the daily, and the quarterly midpoint is 424.02. And it's confluent with this gap fill here. We can obviously get a bit of an overshoot on the midpoint push, and this is what I expect will happen. So this is kind of the setup, I think. We push down, we bounce, maybe we should retest without making a higher low, or we just go up above. And then the first potential target is the Q3 open. Remember what I said about the quarterly open? That when we lose it, if we lose it again, it's gonna be pretty bad. And this is exactly what we got. First time we lost the quarterly open, we recaptured, but the second time we lose the quarterly open is gonna be bad, and I think we go down here. Uh, this is not the maximum we can see. I think the maximum we can see based on the June levels is here, 416. It's quite unlikely. And I want to show you guys some comparisons to what I would like to see happen for a low candle. The best examples are this one, this one, and this one, so that you know what to expect. And let's look at, first of all, it's outside the Bollinger Free candle, and we would like to see to be outside Bollinger Free. In our case, going here would be a move outside Bollinger Free, which is they almost always get reversed. And my ideal scenario is a very strong push down, ideally pre-market, that eventually gets reversed. This will be scary as fuck. I have missed buying it because of fear many times. I will try not to do this the same this time. But what did we have here? So we had a 1.46 gap down that continued down and went as low as minus 393% for a total of minus $17 on the day relative to the previous day. But this then got reversed and went plus 1962 plus 446 and closed $19 up. So this is huge. Like we had a minus 70% dollar day that relative to the lows went into a plus 90% dollar day. This is the kind of thing we can potentially see. On the other side, we had a gap down a minus 245, no, 2.59 for minus $11 almost that got reversed and closed plus $17 relative to the lows. And on the October low, we had a minus 2.3% gap down that got immediately actually continued a bit lower. It was minus 1.99, continued minus 2.3, and then reversed up and closed plus $17.86 on the day and plus 4.88% relative to the lows. And in our case, this is something I want to see as well. Even here, let's look at this one as well. So relative to the lows, the previous day was minus 1% down, went to minus 146, then reversed and closed up for $71. Uh, I don't know if this was rejected. Let's say it went up $9. So what I would like to see as a low is something similar to this, assuming it's on Monday, but it doesn't have to be on Monday. We have this down, we push down like 1.5, 1%, let's say. We push down what gap down, we continue down, go into this area like minus, let's say minus 2%, and then we reverse up and close like 444, 45, let's say this. So we actually go down $8, $9 and then do a counter reversal and end up the day like plus $10, $12, something like this. This is what I would like to see. It doesn't have to come on Monday. Sometime next week, I would like to see something like this. Like I said, this is not necessarily the low, but it can be. Is the most likely candidate. Uh, and that's the kind of behavior I would like to see for the low confirmation. And on top of this, we want to see high volume, like high volume here, high volume here, high volume, high volume. We want to see this. Even if the candle is red, if it's a red hammer candle and we get a wick down, a large wick down, that is still bullish. It doesn't have to be like a full-on green candle. Like gap, maybe it doesn't gap down. Maybe we just drop during the day. If we have a minus 2% day that becomes a minus 0.3% day, even though the candle is red, it still counts and is bullish. And almost everything else is pointing to the continue move down. We have VIX with this hammer candle. RSI is very high. I think we can go as high as 20. Uh, VIX RSI doesn't go much above the 70 RSI, and I think this time is not going to be different. We have a range here. Could see it go to as high as 20, but actually probably lower, like 18, 19. Then we have mega caps, which are kind of in the air, and that's why I think they continue going down. So Tesla in the middle of nowhere should go down to at least here, maybe potentially to 228. Apple double rejection and looking like it wants to undercut the low. Uh, it showed relative strength, so I don't think it goes this much further down. Something like 170, not a lot of downside. Nvidia got below the channel, and now I think the target is this gap area here. Um, this is the bounce on 422.23 for the market. If Nvidia doesn't stop here and goes for the gap fill, this will be SPY 416. So again, it's possible but unlikely, like 10% probability in my opinion. I think 90% is this. Google also in the middle of nowhere, so it still has more room to bounce. I think we go to this area here and bounce here. Amazon also in the middle of nowhere. I think we still have further down to go to 125. Microsoft to this area here. It's a bit more complicated than Microsoft, not sure where it stops. It could be 311, it could be 305, don't know. Meta has shown relative strength, despite me being the most bearish on from the mega caps, and I still don't like it at all. Um, One thing to note is that Meta topped in September, and then it was weak, while other mega caps, September, this is September, did not top in September. They continued going up higher. Nvidia, September, back, but they went higher. Back, but they went higher. Not Meta. And I think we might see a repeat of this. So my expectation is that Meta will be weak and might see a breakdown, even though the other mega caps will go up and the market will go up. And same for Netflix, but not in the same way. Netflix stopped in uh, in November, still earlier than the other mega caps, but not in September. And I think Netflix has one last push up in it, and should stop like 367-ish, somewhere in this area here. Some still think it does this. TLT was also interesting. I think the TLT breakout is bullshit. US 20-year long-term yields. But I, I think I have a long-term position on TLT. It's down right now. I added once, average down a bit once, and I'm waiting for this 89 thing to go big. This the current narrative is bullshit. Like it's more of a contrarian thing than valid bearishness, because JPA was super sure that no cuts in 2024, maybe 2025. We're gonna keep higher for longer. Everything is maybe we do even another rate hike. The headlines are yields are higher forever. Get used to it. Everyone is bearish bonds and shit like that. This is a very contrarian setup for bonds, and I think bonds maybe we get one more push down next week, but bonds from here will just rally. There is no fucking way bonds keep going down and yields keep going up. It's a fake breakout that will get strongly reversed very soon. It's a signal that something will either break or the economy is going to turn into recession mode very quickly. So don't buy the bearishness on bonds. It's bullshit. And for the weekly review, I didn't prepare any new names because everything kind of looks the same. And if the market goes down, everything goes down more or less. For GME, GME was number 3 on the dark pool thing. Seed was number 4. Airbnb is number 2 here. here. So I think it may go to 16, then we get a bounce, retest this area and bounce again, maybe go to 18, potentially 20. This is all one step at a time. So target 1, target 2 in this area. Anything beyond that is a bonus. We don't care about it. Even target 1 is more than enough if you take a long position. CRISPR, on the other hand, it's breaking down, and losing this level is quite important. And I think we get a retest of the lows here. This didn't work out as I thought it would. Maybe it stops here. So maybe it does this. I don't know. But I don't like the fact that it lost the trend line. Even if it does this, I think it's bearish and it will eventually do this. So all of this is lost now. Yeah, this looks like maybe not even good as high as the trend line. Maybe just go here, retest the horizontal level, and then go down. CLF I like a lot, but after next week, this consolidation pattern, falling wedge type of thing looks bullish as fuck. I think it can continue down a bit, maybe even do like a fake breakdown for a retest of this level. But other than that, it looks very, very nice. And I think it's gonna do a monster rally uh, up to maybe up to 17 into year end. Chinese shit breaking down, but HSY was bullish, like plus 2% on Friday. With US equities being weak next week, I expect another retest of the lows, but then bullish. So back to bullish on China. Don't recommend catching the falling knife unless you do it speculatively. The trigger for long is recapture of this, retest, and then moves higher. XLF, think it holds here. Pre, not that good, but 38 should stop the drop. Did not see this second leg down in RH coming, uh, and it's on support now, but I don't know. If it already dropped this much, I don't see why it cannot go to 240. This is a clear buy. ELF is playing out nicely. I'll cut this, cut this, cut this, cut this. Point here is this is this can be strong support. This is strong support for sure. But if the market bounces next week, don't chase beyond 96. So if this goes hand in hand with the market, it will bounce here and probably go here and maybe get rejected and do another leg down, like from this point, like this. But don't chase beyond 95, 96. Okay. UPS went into the air pocket zone and it doesn't look that well, but we have a bullish divergence. Same as JD, the play here is to wait for a recapture. Don't, this one, especially this one, don't catch a falling knife. Wait for a recapture, then bounce, and then we can take this long here. This to here. Target 1, target 2, target 3. Anything beyond this is a bonus. Lucid, I showed the dark pool. We got the drop I expected because it's in its nature. Maybe it drops even more. 5 should be the support. Psychological level. So 5 is our next target. And on 5 I think it's potentially a speculative buy, but you know these names, they're fucking strange. And this is not happening unless we get a reason to squeeze. But going to 6 is plausible. Then Solars. Uh, Next leg down, then we buy them for the TA reason. I remind you that these names are bearish macro-wise. Because of high rates, their customers cannot get financing or are refusing to finance for this with rates this high, and they are losing customers. These are fundamentally bearish until uh, we get the Fed signaling for rate cuts, or at least until the market starts believing the Fed will cut rates, will be forced to cut rates. For now, we're playing a bounce because they've been dropping for a while, and that's the only reason why we are buying. No other reason. This might stop here actually. So the play with this kind of name is buy here. Let's say we go to 113. Buy here. We have a target at 136, maybe 155. We play this, then get the fuck out because this will drop back again. Until we get a signal from the Fed that they are done cutting rates and they will start considering cutting, these things will not bottom. Even if they go up a bit, it will be a dead cat bounce. Maybe they do like a range here and consolidate for a while and eventually break out. But just like every other name has done horizontal ranges, like look at JD. Expect to see something like this for solars as well. Everything is looking TA wise close to a buy. Not quite yet. It's here quite nice. So next week is speculative solar week. Basically speculative everything week. Close by showing the delta setup. Let's do 422.01. Shouldn't have hit enter there. Delta charts, what would it look like? Positioning. So see how close to zero we are. This would be 11%. There have been bottoms that were higher than this. If we get this, it's a clear buy, and anything below 420. Let's do that for 415.01 for the sake of the discussion. Go back here. Be at 7%. This is good enough to buy any day. Only this, but price deviation wise, we are close of not quite there yet, but we are close to being quite there. So this is the 5-day percentage wise deviation, meaning how high or low is SPY percentage wise compared to 5 days ago. And as you can see, when we get to this area here, we tend to reverse. This is the 10-day deviation, and we are close to the bounce point. And imagine like on top of this another $10 down. Like it won't look like this. It would look another, I don't know, 4% down, because that's like 3% down, because that's how much we can drop. So we'll basically be in this range here. Obviously, in the past it went even lower, but this was a bear market scenario. We were at the biggest drop in a while, so I don't think we will see this quite yet. This is the first drop. The maximum we can see is something like -7, -8%, similar to the first drop from the bear market top. And we will be very close to this level if we drop to 422, even closer if we drop further. And this is the 20-day deviation. Same kind of thing. If we get another push down, we will be in this bounce range. So everything is pointing to a dip buy. This one don't matter because they are lagging. Like this is the 90-day, this is the 60-day, and the 30-day. Maybe the 30-day matters, but as you can see, the 30-day is almost on the buy point as well. Obviously, it can go lower, but not on the first attempt. Like this is what it looks like on the first attempt, minus 8% compared to 40 days ago, and we can easily get that. Like if we, how low are we? Minus 6. We go down, minus 8%. And this would be like 42 bars, 61 days. It's the bar, the days here. So yeah, you can see that we can easily get to those levels of oversold. 18 bars, 21 days, 30 days, 30 days. This would be it. So something like this, minus 7%. If we were to push lower, we get into that super oversold range. This would be 414, 415. So yeah, everything is pointing to a strong bounce, which would be $20 to $40, and just close your eyes and buy the dip and hopefully profit. Have a good one. Bye bye.